Welcome back. In the first part of the video, we prepared journal entries, adjusting journal entries, I should say, for problem 3.3a. In the second part of the video, we went from our unadjusted trial balance to our adjusted trial balance, and now we're going to use our adjusted trial balance to prepare financial statements. We've got the information to prepare an income statement, statement of retained earnings, and a balance sheet, so let's stop dilly-dallying and let's get down to business. We're going to start with our income statement, of course. That always comes first. Name of the company is Netlock Security. Netlock Security. The name of the statement we're being asked to prepare is an income statement. And this is dated for the year ended. And then the date. June 30th, 2029. Okay, so we've got ourselves a beautiful title. Now remember what the income statement is. It's a summary of revenues and expenses. And the good news is, if you have a trial balance, which you will have in real life, preparing an income statement is easy because revenues and expenses are all grouped together here, right? So we just take our revenues, $499, we deduct our expenses with appropriate subtitles and subtotals, I should say, and subtitles maybe, and then we calculate. So it's going to be $499 minus all this stuff is going to give us our net income, but we have to lay it out properly, of course. And this is a flashback to chapter 1. Very similar actually to problem 1.5a. So if you're looking for more financial statement practice, I think 1.5a is a good version of this. Okay, so we'll start with revenues. I'll do a heading, revenues, and under that revenue we just have the one security rev, and security revenue was $499,000. Because I just have the one, I write it towards the right, and then we're going to do our operating expenses, which for us is everything except interest and income tax. So I'm just going to list them in the order they appear here. Salaries, expense, and to be clear, we're taking our adjusted totals. $321,500 is our adjusted salaries expense. Interest expense we'll save till the end. Depreciation expense is $1,250. Oh my gosh, I got the wrong number. 40,000. I hope you're yelling at your screen. I'm glad I caught it. Depreciation expense is 40,000. Supplies expense is 4,700. Repairs expense 17,000. Insurance expense 8,000. And rent expense is 60. Okay, so that's it for our operating expenses because we left off interest and we left off taxes, which are non-operating expenses. So let's total this up. There's my calculator. Bring it back. 321,500 plus 40,000 plus 4,700 plus 17,000 plus 8,000 plus 60,000. And we land on 451,200. 451,200. That is our total operating expenses. So remember, we have now a subtotal is needed. Our operating revenues, which security revenue is our operating revenue minus our operating expenses, 451, gives us our operating income. And this is just the income our company generates from its, doing security work. Operating income, also called operating profit, minus 499,000, hit the plus minus, 47,800. So 499 minus 451 is 47,800. Then we have our other. And in our other category for now is just one thing. It's another expense, and it's interest. And our interest expense here is $1,250. Because there's only one other, I write it towards the right. I don't have to say other interest $1,250, total other expenses $1,250. No, because there's only one item, you can just make it its own total. And that brings us down to another subtotal, income before tax. Our pre-tax profit, 47,800 minus 1,250 is 46,550. And then we have income tax expense. And that was $7,000. And that's going to bring us down to our profit, our net income. How much money did we make? 46,550 minus 7,000. Our after-tax profit, 39,550. We need some dollar signs to celebrate our $40,000 in profit. Dollar sign at the top of each column, dollar sign beside the bottom line. And there we have a beautiful income statement. I'm going to right below it do the statement of retained earnings. So it's a 3-line title, net lock security. I'm going to make it smaller just to make it all fit. Net lock security. Statement of retained earnings. And this gets dated for the year ended, just like our income statement. For the year ended, and then the date, June 30th, 2029. Okay. So remember how our statement of retained earnings works. It actually starts with a date, which is our beginning of year retained earnings, which will be this number. Assuming there is no adjustments to retained earnings, there's quirky things that could cause us to adjust our retained earnings, but not in an introductory class. So we're going to start with our retained earnings of $87,000. That is our retained earnings beginning of year. And the beginning of the year, you just add a day. So you go June 30th. What's one day later is July 1st, 2029. And you take off a year. So July 1st, 2028 was the beginning of this year. So July 1, 2028. And our retained earnings on July 1st, 2028. Maybe I'll leave myself a little space here. Move this down just a notch just to, yeah, that looks nicer. Was $87,000. We're going to add net income. Our net income was from our income statement, $39,550. We're going to deduct, or subtotal, 87,000 plus 39,550 is 126,550. We deduct dividends, and our dividends were right here, $10,000. And that gives us our retained earnings at the end of the period as of June 30th, 2029. 126 minus 10 is 116,550. All right, so we've done a beautiful statement of retained earnings, dollar signs at the top and at the bottom. And now we're on to the last statement, which will be the hardest, the balance sheet. The good news, though, is, again, just like our income statement, if we've done a good job on our trial balance, we've got our assets, then liabilities, then shareholders' equity account, just all in order, right? So it will make our life easier. I'm just debating how to lay this out. You know what I'm going to do? Is that going to work? I'll try something. I'm going to move all this stuff way over to the right. And then I'm going to do my balance sheet to the left of that. We'll see how this works. All right, well, I'll give it a shot. Let's start with a 3-line title, name of our company. Now, remember, balance sheets, I always make them a little bit wider, so you can see I've kind of left myself a fairly wide berth here. Name of the company, NetLock Security. Name of the statement we are preparing, which is a balance sheet. And remember, balance sheets just get a date. They don't get a for the year ended or for the month ended. They just get a date. And the date is June 30th, 2029. Okay, so on the left half of our balance sheet, maybe I should just draw a line there to distinguish. We have a big heading for assets. On the right side, liabilities. And 2/3 of the way down the page, somewhere down here, we're going to put shareholders' equity, but we're not sure where yet. So let's start with our assets. And of course, we do current assets to begin. I'm thinking, I don't know, my calculator is just in the way, but I think I want to do this. Oh, you know what? This is probably better just like this. Okay, let's do that there, and then I can zoom in a little bit. That'll have to do. All right, so under current assets, what do we have for current assets? Well, the first one on our list, and the good news is the list is in order. So cash, accounts receivable, supplies, prepaid insurance. These are all current. Prepaid insurance is going to last for a year, but now we have 8 months left, so it's less than a year. It's a current asset. So let's list these out. Cash. And our cash was $56,000. Accounts receivable, and our AR was, the adjusted balance, of course, was $16,000. Supplies, $300. And prepaid insurance, $16,000. So the total here, 56,000 plus 16,000 plus 300 plus 16,000 is 88,300. That is our total current assets. Onto our long-term assets, PPE. And we just have the one item, and it's computers, but there's AD on those computers. And remember, we're using the adjusted, not the unadjusted amount. So it's 200,000 of computers with 80,000 of accumulated depreciation. So what do we think our computers are worth? 200 minus 80. We think they're worth 120. So that's how we list them. We go computers, net, 200 minus 80 is $120,000. And because there's only one, we put it in the totals column. All right, so that brings us down to our total assets. 120 plus 88 is 208,300. 208,300. That is our grand total assets. We might want to do a little star there, and really different professors will prefer you to treat this accumulated depreciation calculation differently. I don't require my students to do it, but you might want to show your work, which is computers, which were 200,000, minus AD, accumulated depreciation, which was 80,000, equals computers net, which was, of course, 120. So that's an optional step, but it might be a step that you need to make. Depends on your prof. I'm fine with just doing computers net 120. This calculation would be in the footnotes, the notes of the financial statements. Let's put some dollar signs. I always treat the finishing assets as like finishing a statement, and it's only half, but the balance sheet's a big statement. So there we go. We've got our left side of our balance sheet done. Let's move on to the liabilities. And again, we're just working our way down the list. We did all the assets, cash, AR, supplies, prepaid insurance, computers, AD, and now we're on to liabilities. And I think they're all current. So let's list them out and see if we have anything long term, but I think everything is current. So first one is accounts payable, $14,000. List on the left, total on the right. Then we got salaries, that's definitely current. Salaries payable is $1,500. Interest payable, $1,250. Unearned security revenue, $5,000. Unearned, I'm going to make this go on to 2 lines. Security rev, $5,000. Now, again, it's all in the same group. Note payable is the only one I had a question about, but I think, if I recall the question, we were planning to, let's see, it says, the note is expected to be repaid in late 2029. Well, it is 2029. It's June 2029. If we think the note's going back to be paid in late 2029, it's current. So the note payable, which is $30,000, is current. And that's it for liabilities. So let's total it up. Total current liabilities, which is also total liabilities. And we need a total. 14,000 plus 1,500 plus 1,250 plus 5,000 plus 30,000 is 51,750. 51,750. So that's it for liabilities. On to our final heading here, shareholders' equity, and we always just have the same 2 accounts. Common shares, which at this stage of the game aren't going to change much, and then retained earnings, which comes from our statement of retained earnings. Our common shares, though, we just take the number, 40. Retained earnings, look at the statement of retained earnings, the bottom line there, 116,550. We don't take our retained earnings from the question, right? It's not 87,000 or 87,000 over there. It's 116,550. And now we add this up to get our total shareholders' equity, 40,000 plus 116,550, 156,550. And now we need a grand total. Our total liabilities and shareholders' equity, 156,550 plus the liabilities, 51,750, and we get 208,300. Folks, the birds are singing. The sun is shining. What a long question, but our balance sheet is balancing. Again, a fantastic moment. You write in the greatest essay in the world, and your English professor might disagree with you. When your balance sheet balances, your professor's got to mark you right. Congratulations, well done. Well, you could definitely make formatting errors, and you can balance with some errors in there, but I'm pretty confident we got this one right. $sign at the top of each column. $sign beside the bottom line, and we've got ourselves a beautiful set of financial statements. Let's move this over. I just want to admire those financial statements for just a half a moment, just a second here. And there they are, sitting alone on the page. Okay, we have completed adjusting journal entries. We've prepared an adjusted trial balance. We prepared our financial statements, our income statement, our statement of changes in equity. No, our statement of retained earnings. Sorry. We'll learn a statement of changes in equity later in the course. Our statement of retained earnings and our balance sheet. If you've gotten this far, you should be feeling fantastic. You should be smashing thumbs up buttons, but we've got one more part, and that'll be in the next video. We'll say, okay, we're done. Now we got to start a new year. We're going to learn how to prepare a closing entry, but that's in the next part of the video. Thanks so much for watching. I'll see you then. Bye-bye. The next video in our series is right up here, and if you want a supercut of all of the videos in this series, that's the one down below.